Hello everybody, hope that you're doing very well and welcome to this evening's Contenders live stream where I'm going to be going through the following link chart of the week, which has been a beauty, by the way, really beautiful. Then I'll be moving on to Trading Channels Part 3. Yes, Part 3 tonight. Obviously we've already done Part 1 and 2 and the final part tonight is Part 3. So yeah, there's that to look forward to, and then at the end I'd like to just cover altcoins. As we all know, the altcoins have performed extremely well over these last few days. 48 hours, just over. They've just been firing. Okay, so I would like to at the end cover not just like general things, but more like controlling emotions while you're trading this. So in terms of I believe that you have two banks of traders when you are seeing really big moves up. Okay. You obviously have the bank that will well, I guess you have three kind of banks. You have one that will just FOMO into anything that comes up. As soon as they see green on the day, they'll just buy it. Okay, that's one type of trader, really not the one that you want to be. And you have the second part that's going to see these really big pumps and just be feeling really annoyed that they've missed out, just feeling regret of missing the pump. And then you have another type of trader that will see the pump. Maybe they didn't get in on the move, see the pump, and then instead of regretting missing, feeling regret, they just focus on what the chart's given them and look to buy retracements. And then you obviously have the over patient, if that's a word, trader that would wait for the heavy retracements, and then you'd get the aggressive sort of traders that will get in on retracements, not FOMO, but more aggressive kind of retracements, I guess. So I don't know where I was going with this, by the way, but yeah, I want to cover at the end just generally about this and how we can be looking to trade these altcoin moves over, potentially the next few days to come as well. So yeah, this week's obviously really interesting with BACT coming on the 23rd. So we might have another week of nice moves. Okay, so we are expecting probably that to be the case. So yeah, I hope that you enjoyed this one. Let me just read the comments, make sure everyone can hear me okay. Oh, thank you so much, everybody. Dario, thank you. Yeah, so obviously the contenders don't know this, but I posted in the Champions group yesterday. So obviously I'm going to give 30 seconds to this because I don't want it to be the focus of today at all. But obviously, in my personal life right now, things are not the best. Obviously, my granddad has been told he only has a few weeks left. For me, he's I don't know, my star, I guess. I love him. So yeah, for me, personally, although I try and really be professional on this stream and hide everything, kind of, block out how I'm feeling personally, I am really kind of, I don't want to say depressed, but obviously not, I don't know. So yeah, things for me personally are not easy, let's just say, at the moment. But yeah, I hope that I hope it doesn't come off in the stream, and I hope I can stay positive and happy, because that's obviously a really hard way to learn if you think, I don't know, yeah, obviously, yeah, just to throw it out, just to push it to a side and just to acknowledge everybody's comments, yes, things for me at the moment in my personal life are not easy, but you're not here for to know my life story. I guess you're here to just learn to trade, and that's what I'm going to give you tonight. So hope that you enjoy it, and yeah, let's go. So yeah, starting off with link chart of the week, which has been, as I said at the start, beautiful. It has been the purest trade. I was reading through all of the chart of the week entries, and we had a really good amount of chart of the week entries. And obviously over on the Discord, you have your chart of the week entries where you can also enter your ideas, etc. And a lot of people entered this week. This is really good. We had several entries, and people actually were the majority were on the right side of the trade. So this was absolutely brilliant, and people actually had the same setup here of buying the 618. So I can tell people are learning. It's really good. See, that did make me happy. But yeah, this was my setup for link chart of the week. So this was posted 2 days ago. Obviously, this was before the altcoins shot up like they have, so that was obviously only beneficial for Link. At the time, we had seen a very steady move up. We had seen an increase, and I'll point this out. We were in the overall golden pocket. I think Link, in my opinion, was the strongest of all of the altcoins, okay? Link being in the place it was. I guess we had a few altcoins that are in really similar positions. Obviously, if we think to Litecoin USD, also sat above weekly. We had obviously Ethereum coming out of a falling wedge. So there's two majors, obviously, with bullish-ish charts, and then we had Link in the overall from low to high 618 golden pocket. You know, people are going to tell you lots of different reasons why we're getting an alt. I hate to use the word alt season, but, you know, alts are moving nicely, okay? You're going to see so many different reasons across the media, social media. You're going to be given a load of, what's the word? Rubbish of why the altcoins are moving. You know, and I'm not saying I'm correct, but I always have said and always will say altcoins follow Ethereum and Litecoin. If Ethereum and Litecoin are doing well, the altcoin market will generally follow. Okay, so when you look at Ethereum USD in a falling wedge, when you look at Litecoin, obviously on the macro, these are on weekly support. You know, these are major support levels, okay, and now obviously it took a while to get bounced. It took a while to get that bounce going. We were, you know, hovering around these supports with really doing nothing. But then, you know, I think as well, when Bitcoin is massively volatile, the alts are not going to be successful. And obviously this week we had Bitcoin literally move sideways. For the past 5 days, Bitcoin has done absolutely nothing. Absolutely nothing it's done. So, you know, with Bitcoin literally going sideways, it has been a prime time for alts to pick up. So the strength of Litecoin and Ethereum, cooped with the fact Bitcoin has been moving sideways for the last 5 days, really has fueled the altcoin moves. Okay. And people are going to tell you it's X, Y, and Z reason, the Bitcoin dominance, you know, all this sort of stuff. But really, that I don't view it like that. I'm not saying they're wrong and I'm right, but just the way I view it, you look at the majors first, and then the rest of the alt market will follow as money sort of trickles down. That's always, in my view, how it's been. Anyway. So what we can see here, so what was I looking for on Link? Okay, so obviously this was 2 days ago, 16th, and we're now on the 18th. So yeah, now what we can see is it was a slow rise up. Okay, so slow rise up. I wanted to get in on the retracement, okay? So this was, for me, a slight front run on the 618. If you look at Cardano, the exact same setup here. Also, which is another, I would class like major altcoin, but, you know, lots of altcoins had the exact same move off of this 618. So yeah, it was pretty nice. But yeah, basically what we can see here is move up, looking down to that 618, put a little bit of notes here, overall in the big golden pocket, moving down into the smaller golden pocket. So if I zoom out here to the daily, and I'll just show you what I got on this chart. I'm really sorry. To make things worse, I'm also like got a cold. It's just life at the moment is just like shooting me, man. But what we can see is from the very low to the very high. Okay, if we just hide everything. So, you know, I know that I haven't got to Fibonacci yet in the contender streams, and I'll be getting to that very shortly. But what you were doing here is we're taking a fib retracement from the very low to the exact high. Okay, so you're then fibbing the whole move. And if I just clear this up a second so we can actually see here, so fib from the overall low to the overall high. Okay, we are retracing into this golden pocket of the whole move. One has to look at this as a level of support. If you do compare this to Litecoin, I think they're very similar charts. Obviously Litecoin with a little bit of a slight heavier drop, but overall very similar charts. Okay, so we're on the overall golden pocket. I'm always looking for a reaction at this, and just what is extra sort of nice I guess here is we also had a high. Okay, a high, and then this low. Okay, and this for me is what was really major. Okay, so as you all know, recently crypto likes to take out lows and sort of reverse. So if you just look here at the very low of this wick, okay, very low of the wick, what do you actually do here? You take out the low and you get no follow through. That is a sign of things to come. Okay, so that is a sign. I didn't actually buy the bottom on Link. Okay, this was my only entry onto 618. I was not entering here off of this wick. So if you didn't, it's hard trade to get this. Okay, so in hindsight it looks very easy, but in real time, yeah, I was definitely not buying here. But here what we can see in hindsight, I guess, is we did in fact form a swing failure. It would have been a very nice buy if you got in on it. Well done. But what we can see is just while I'm mentioning this, I guess, as a trader, you shouldn't really be trying to always long exact bottoms and essentially falling live. You know, if you see the rundown here, you know, if you see this rundown, it's very risky to be, you know, it is very risky to be buying this low here. Okay, maybe if you had waited for this wick and then got in on the retracement, yeah, you know, it's not so bad. But originally, all we can say is if you see a move up, waiting for the retracement is a good sign. But anyway, you know, my trade was from low to high, waiting for this pullback onto the 618, and we also had, for me, which is really important, market structure from low, high, higher, low, higher, high. You know, looking for that higher low. In this section of the chart, we would. In this section of the chart, third time lucky, we had gone into bullish market structure. Okay, so when we're in that bullish market structure like this, what we're waiting for that pullback and for another new high. Okay, so fibs from low to high, looking for this 618 retracement. You actually held it really well. Okay, wicks, and then your final wick that was onto it ended in a bullish engulfing candle here, and you know, the rest is kind of, you know, moving up. So that's really why I like to see support being found within, trying to load up overall here, so within that overall golden pocket. Okay, so yeah, very nice. I really believe this was helped by Litecoin and Ethereum. Okay, so that you know, maybe this target, you know, we never know, really. I guess this link could have done well without Ethereum and Litecoin, but the speed of this rise, okay, we're talking about you know, in one day, you know, 1.5 days, 16%. That is an extreme move to the upside. Very good. And this, I do believe, has been helped by the overall you know, sentiment of the altcoins right now. Okay, so this is definitely a plus. So yeah, I'll now talk you through some of the adjustments I've made to this trade. So since I entered the trade, I obviously was looking for the overall take profit just above these highs. Okay, so my target is these highs, slight front run on this weekly. That's just to protect myself. I don't want to get really greedy and go for this high in case we do just take this high here and fall down. Okay, and this is me really looking between that high and this high here. Okay, a mixture. If we start to hit that one and fall down, I'll close my position. Okay. So that's just one thing to be aware of. And then lastly, if we in fact do not get rejected here and close above the weekly and back test to move up again, I would re-enter this trade. Okay, so I would get back into Link if it done something like that. At the time being, we're actually rejecting off of the 786 fib, and today I compounded a trade. So I originally had a take profit set at the 618. Okay, so from high to low, had a take profit set at a 618. Okay, and I did even write up about this yesterday in here. Yeah, so take profit at a 618 retracement, and then a slight front run on the weekly level, which is also where the last highs were. So if you know, this was my thought process while entering this, but what we can see here is it actually gave a really nice compounding trade. Just going to remove this fib temporarily. Okay, and this fib a second, just so we can actually see this chart. Okay, so take profit for me was at a 618 retracement. Okay, and this is from high to low. Okay, looking to take profit in this golden pocket. Why not just golden pocket on its own? You never trade from it alone, but golden pocket. Okay, and also the fact that we had a old sort of consolidation period before a large move down. This is going to be an important area, and we did get a retracement. And also, if you look on the daily, okay, it's always factoring all these things together. We also had the daily 200 EMA. Okay, so obviously at the time we can now see, yeah, it's moved up. At the time I was taking profits for this exact reason. We had the 200 daily and a 618 and that, you know, sideways consolidation period. So for me, that's a take profit every day of the week. Okay, what we can see in the end, oh, that was actually really nicely as well on the 15-minute here. Okay, so on the 15-minute we did in fact have the 55 exponential moving average. I wasn't even looking at that. I wasn't trading the 15-minute today. But what we can see here is from low to low, we had that. So this is where it starts to get impulsive, yeah? So this is where it starts to get impulsive. So trend line from the low to the next sort of low, expanding it on. You had a trend line hit, and then also, which is really nice for confluence, is from the low where it started to get impulsive to that high. You had the 382. And on top of that, you also had this old resistance. You imagine it to flip into support, and this in itself is another about 6 6-7% gain just from here. Okay, so that was about 12:30 this afternoon. As you know, in the Champions Group, I've been really clearly open that I was long on link. I need to get my words out. I made it very clear I was long on link, and today this was the opportunity, and this is kind of like linking into what I wanted to cover at the end, I guess, on if you have missed out on link, if you had seen a reaction and you wanted to get in, this would be your buy-in opportunity. There, if you see something really impulsive, you have to know when you're not classed as FOMOing in, but you're just aggressive on your retracement. So you're never market buying, basically. FOMO, in my opinion, is if you're market buying, here or here or here. If you're market buying, you're clearly FOMOing in. But if you are patient and waiting for logical retracements, they might just be shallow retracements. This is a shallow retracement, but you have to know, especially in altcoins, that many people will sit on the sidelines waiting for a heavy pullback. And, a lot of the time, people sit on the sidelines waiting for heavy pullbacks, and those heavy pullbacks never come, or never is the wrong word. They can move on very strongly, and then, they'll pull back like this really quickly. But, you don't want to just really sit there. Personally, if you're day trading this anyway, is extra important that if you are wanting to get in on a move that is looking very impulsive, then you do want to get in aggressive on retracements, okay? And this is definitely not FOMO, okay? It's not FOMO. It's a logical reason to be looking to, add here, So, that's just a way I'd say look for logical retracements that are not classed as FOMO, but a place where you can clearly see a technical reason to find support, and that's giving you 6%. You could have missed out on the first 10%, got in on this 6%, and profit. And so, so yeah, that's also was pretty nice. So then from here, all we can say is that right now we're finding resistance on the 786. Okay, so I'd scaled off into 786, and we'll see how this goes from here. It's not looking bad. I wouldn't say this is looking bad. In terms of, we could get a retracement. So this is, if you're not in a move, for example, you could look for a move back down to around here, and then try and play that last leg up sort of thing. Okay, and again, there's no guarantee it just doesn't fall down, absolutely, but if you clever with your entries and exits, then you could look to trade that last move, and then we'll either see if it sort of falls down there, or whether we in fact take the high and then move higher. But I think Link was really nice, and I guess for some examples of what were really similar, so obviously this original trade, if I just clear up this fibs and everything, so the original trade was obviously taken from low to high 618 bounce. If you just review the altcoin market and how similar a lot of these other moves were, so you see XRP, look at the strength of XRP, it's been absolutely incredible, and that all started from low to high 618. Okay, if I went through all of these coins, Walton Chain, low to high 618, incredible move up. Okay, you're gonna see it not on everyone, but you're gonna see it quite a lot on these alts. So this is one that I missed out on, because this one I was going from low to high looking for the 618. And this is the thing, I missed getting on the 618, but XRP 618, Walton Chain 618. What was I doing there? Link 618, Litecoin didn't reach the 618, and this is the sort of thing where I didn't buy Litecoin on the 618, but I happily bought it when it broke above what I was looking at resistance, and that was for me the 786 here, from high to low 786, and this daily. You can miss out on this 5%, and then you get the next like 7%. It doesn't matter if you don't buy these lows, or if you're waiting for an entry but your entry is clearly not coming. You need to know when to cancel your entries and buy higher up. By not getting an entry and buying higher up, you don't lose any money. So that was like for me, Litecoin, waiting for this, never came, but the rest had obviously came. And then you look across the board, obviously, EOS was really never retraced at all. I guess if you're waiting for EOS, that kind of just took off on that long extended bull flag, but nevertheless took off. Anyway, and I guess ending with Bitcoin here, that obviously went from low to high, hit to 618 and got a nice move up as well. So overall a lot of 618 bounces. I think we can all agree on that. Okay, so that's the end of Link. So I want to move on to part 3. Made this morning. I can't even remember what I wrote out. First take profit here, the golden pocket, then get Okay, so basically what I just mentioned, that hit the golden pocket, then retrace back down. And then obviously, as I mentioned in talking, look to scale out at 786, and now from here I'll see if it retraces back down. Well, I would then look to add back in here. Okay, really still looking for the target of the highs. Obviously, if we start breaking down, then I'll close out the trade early, but there's no reason for me to think that at the moment. It's looking good. Okay, so let me just read a few comments here. Evening everyone, we are here for you. Had your backs, bro. Thanks for helping us out. I mentioned that compound at 16k. Yeah, well done everyone. The group has been doing really well. I'm not gonna lie, people have been like, yeah, doing really good calls. So it's been nice. So yeah, the channels. Okay, so this is one that I actually added in today. So I originally didn't have this like slide. I made this what was this morning because I had a lot of questions about doubling these channels and can you double the channels. Absolutely, doubling the channels. I'm just gonna take a drink. I'm so sorry. Doubling the channels is actually a really good way of getting targets for a move. Okay, and let me just like show you exactly what I mean by doubling a channel. So what you can do is take out here your parallel channels. Okay, oh, here we go. So just take out your parallel channels. Okay, and what you'd be looking for, or what I mean by doubling this, is if you are in a channel, okay, if you're clearly maintaining a channel, and then when you break out the channel, all you need to do, if you're on a computer, just hold control and sort of drag it and double it. Or if you don't have a computer, you can just right click and clone. Okay, and then you will move this channel to the top of the old channel. Okay, so if that makes sense, you are basically, it's a one-to-one of the channel. Okay, and you know, this is an easy way to look at one-to-ones without having to load up fibs or anything. You just literally are cloning this channel, okay? And then what you would expect is to see then, you can expand this out, what you would expect to see is the move after breaking up from this first channel. You can then duplicate that channel and basically look for the move to contain within a new channel, where you can definitely see something like this going on, okay, where you have a channel breakout which then moves into a duplicate of that channel and then trades within that channel. Okay, and this can be, as I've tried to demonstrate here, like a bull flag downward sloping channel, or just standard like range bound sideways channel. Okay, and if it looked like this, you're in a range, you're in a nice range, you break out that range, and what you're looking to do as soon as you break out, you're duplicating that channel, okay, exactly, and you would expect to look for targets of the middle of this channel and top of this channel on the breakout. Okay, all I would say is I'm never using this alone. Okay, if something breaks out of a channel, I'm not just duplicating this and only saying, right, here's my next take profit, here's my next take profit. I use no tool alone. Okay, so I never ever use a technical tool alone. It has to always be matched with another form of technical analysis, be that Elliott waves, be that Fibonacci, be that SR levels. Okay, it has to be matched with something else on the chart. So I wouldn't use this alone, but if, for example, you know, if for example we're going from low to high to low, and we're seeing, you know, a 2618, and if this was the midpoint, you know, it's just lining things up with other technical tools. If you start to see a major SR level here at the top of the channel, then you can add a lot more bias to the extension of the channel. Okay, but that's, you know, that's a perfect and acceptable way of like duplicating channels to get targets. Okay, so it's basically once the original channel was broken, we can duplicate that channel to then give targets for it, be up or be down of that move. Okay, and I added this one in just because a lot of people asked the same question, which is fine. Like, I like people asking questions. It's really, really good, and I actually promote asking questions. Like, you should ask as much questions as you can. That's how you learn. So it's good that you ask questions, and you know, this was one that I received a lot, so it warranted a slide to start, and this is a perfectly acceptable way of getting targets for your channels, just keeping it pure to channels. Although I would not do this myself, keeping it pure only channels. If you want to, then yeah, it's acceptable. Okay, I'm really sorry if I'm so under the weather. And that is so horrible. I'm so sorry. So moving on to the next slide, okay, what I'm looking at here is the 2-5 trading range, okay? So I really, really like the, I don't know, this is kind of the name that I've made up, a 2-5 trading range. It's basically a range, okay? So it's our same parallel channel, but we are dividing it into 0.5s, okay, 0.25s. So we obviously have the top of our, if we're just looking at, imagine a standard parallel channel, standard low, standard midpoint, standard high of your sideways parallel channel, okay? And then within that parallel channel, you're adding a 2-5 and a 7-5. And I would really like to stress that this is so much better if the time frame is large that you're looking at. If you're trading on like a 3-minute chart, you're generally not going to be looking at the 2.5 and the 7.5. Okay, I just would personally never do that. This is for swing trade, so we're talking about 4-hour time frame plus. Okay, at least 4-hour time frame. If you're in a range, this is when I'd look to add in the 2.5 and the 7.5. And this was an example that I could find on the chart for you. I hope I haven't made this too confusing by annotating the low and the high. But what we can see here is the overall range. Okay, so this is really important. We're on the 4-hour chart here, and this actually went on more into to the left of the chart and the right. It was a really long sideways range. But what we can see here, and this is Bitcoin, by the way, what we can see is from low. Okay, so where am I? Let's first just start off. Where am I denoting the parallel channels from? Okay, I've taken the range that I would trade from the top candle close here to the bottom candle close here. Okay, so from the top of the range is coming in at this candle close, the bottom of the range is coming in at this candle close, and we can clearly see there are wicks above the top of the range and wicks below the bottom of the range. That is absolutely fine. Okay, what I've done is I've written the highest level of the range. So this is not we are trading the channel, but we have a note of the highest level, so the highest wick and the lowest wick. Okay, and you can see that the wicks that come out of the range or outside of our range, they never took the overall high or the overall low. So we'd only trade this sub parallel channel, but we would be aware that each time, for example, we come to the top, we're not going to have our stop losses really tight, because we can clearly see that there's an overall high. It wouldn't make sense to be longing the bottom here and stop loss below this low. You'd have to be really using your stop losses below this low, or if you're shorting above this high, because otherwise it just wouldn't make sense. Although we're trading this range as it is sideways, you would have to have your stops above the high. Okay, otherwise your otherwise your stop loss is too tight. And I'm also going to mention this at the end of the video, or one of my later slides is, not so much in the group, which is good, but just generally speaking, I know so many traders that they're so obsessed with having like a 0.2% stop loss, or just an extremely tight stop loss. And if you have an extremely tight stop loss, you only want to give yourself an extremely tight stop loss if it is warranted. If you're giving yourself a tight stop loss because you're too scared to lose money, then that is definitely never going to work, and you are going to get stopped out. You have to put your stop losses in logical places, and if the logical place is 4% away, 5% away, you need to put your stop loss 5% away. All that means is you're using a smaller position size. You never want to just give yourself a really small tight stop loss just to have a small stop loss. It's very bad trading. It's if I'm honest, it's very bad trading. You need to put your stop loss in logical places, and if the stop loss is wide, the stop loss is wide. It has to be logical. You cannot just give yourself small stop losses because you want to have a small stop loss. You are probably going to get stopped out if your stop loss is not in a logical place. Okay, so what we can say, a logical place would be above the high or below this low overall. Okay, but then we are obviously looking at the range itself from the candle close to candle close. So yeah, after mentioning that, what we can see here is you can see really clearly how the 2.5 and the 7.5, okay, is really respected in this range, as you can see from from low 7.5 back down to low to 0.5, doesn't quite reach the 7.5 again, okay, but then up through the 2.5 to the top of the range, finding support, flip resistance on the 2.5, back down to the 7.5, 7.5, 7.5 low, high, upper wick, 7.5, 7.5 high, and in the end it just keeps going sideways for like another week. So this was a sideways period, obviously, but that's where you like to range trade. So all I would just say is when you do see extreme sideways movements or just nice ranges like this, add in the 2.5 and the 7.5. It's going to be beneficial, where you can be looking to trade, for example, from the bottom to the 7.5 to the 2.5 to the 0.5 to the 7.5 to the 2.5. It's just another level of taking profits, especially the bigger the ranges, the more relevant this is. Okay, it really has to be emphasized. The bigger the range or the longer the range, the more reason to have the 2.5 and the 7.5. Okay. So yeah, that's just to show you, by the way, how you do this, because not everybody's going to know. Okay, what I do anyway to have in my 2.5 and my 7.5 is I start with a Fibonacci retracement. Okay, standard fib retracement, and then I have a template that's called 2.5. Okay, and that's going to just separate it up really nicely, where you can then just go from the bottom of your range to the top of the range, put in 2.5, and you can pause and look at this. But basically, you're just adding in 0, 0.5, 2.5, 7.5, 1. Okay, put it whatever colours you want, and yeah, then that's how you get your 2.5 and your 7.5. So it's from a Fibonacci retracement. Nice little tip, I guess. So that's how I do mine. Okay, and it's really yeah, nice way to add that in, and I would definitely recommend it if you're on a big range. Okay. So moving on, the over and the under channel. This is actually a really this is a really a nice way of looking at trades, and like I've been mentioning a lot recently in some of my videos, that you know, the market likes to. I don't know if I can use this word. The market likes to screw people over. You know, generally speaking, you know that not everybody wins in trading. You have to know that. So when you know that not everybody wins, you know, generally you're looking for the way of how can the market screw, you know, a lot of people over today, and it's on these liquidity grabs. Okay, it's kind of the hot flavor at the month, I guess, on crypto right now. But you know, it's always been around on other markets. It's just, as I've said before, it happens so much more in crypto than it does on other markets. Okay, so although you'd see it from time to time trading, you know, stocks, Forex, you do see it time to time, absolutely, yes. But you know, say you're going to notice it on major levels on markets mentioned, and on crypto you're seeing it daily. So it's just something to be really aware of in crypto especially. Okay, but you know, this could be used in other markets. But basically, the bearish over under and the same flipped be under over, okay, for a bullish scenario. But basically, what you're looking for is to price to form a range, and this is how you can get heads up, okay. Again, there's never a guarantee in trading, but this is how I like to use a heads up view of having an even stronger opinion of where the move's going to go. Where is this move going to break to? Okay, so what we're looking at here for the over-under is for price to form a range. Okay, so we're range bound here, and then what the price will look to do is come up and takes out some highs. Okay, so take out the previous highs. What happens when you take highs on a move? You have a lot of people that had shorted the top here. They're going to have their stop loss above the high. They're going to get stopped out. Okay, so they're obviously going to stop out. Okay, then you also have people that look to buy the highs. As soon as you get the breakout, they look to buy the highs. Okay, so you have a lot of people buying, okay, the breakout, or getting stopped out, which obviously when you get stopped out, you're short, you have to buy. So basically you have a lot of buy orders coming in here, don't you? A collection of buy orders. What happens where to you know, what do bigger accounts need to fill shorts? They need a lot of buy orders. If you're in a sideways range, it's hard, not impossible, but hard to fill big positions. How can it be so easier? It's, you know, get that liquidity, engineer it essentially, where you are running highs. When you run the highs, you can easily fill bigger short positions because you have a lot of sell orders coming off or buy orders in the form of getting stopped out or people trying to buy the breakout. That's where you can fill your shorts, because you have to match your short or your sell order to a buy order, and you can do that when you take out highs. So what you're looking for is price to take the high, okay, and at first, yeah, you're not going to know if this is a liquidity run or whether you're going to retest and go up. You're going to have to look at volume. Volume is going to be a very key metric here. Okay, so you're going to have to look at volume, but you can kind of look here. If you're seeing high sell volume, you don't obviously want to break up from a channel on high sell volume. You want to see bullish volume. Okay, so you can get heads up on volume, but if you are coming back down here, okay, into the channel on high sell volume, you can be increasing the odds significantly that this is going to end up bearish. Okay, and this might be the case of you're around the high and you just end up falling down totally here, but the pattern is an over under. So that is where we take the over. So we go over onto the top side of the channel, come back into the channel, and then instead of just falling all the way down, okay, and that would just be a classic fake out, fall all the way down, what you actually do is you then run the stops on the bottom side, and this is just to screw over the maximum amount of people. So you've run the stops on the top side, you then fall down to the bottom, and instead of just falling straight back down, you actually run here, and this is why if you short here, you always take profits at the bottom, whether you're aiming for the lower or not. You take profits here all the time. But here what we're seeing is, right, so an example that I've made, but here what we'll be looking at is a move under the channel, okay, under the channel. So what are we getting here? Just people that are obviously in a long, if they're long any of this, they're also out of the move now or getting stopped out. Okay, and then so you run liquidity to the downside, and the over under is essentially you look for the move to the upside, to the downside, and then you're looking to short, okay, from the middle to top of the channel. Okay, so when price gets back inside of the channel, take a short position in the upper half of the channel and use the upper liquidity wick, so that would be this, for your stop loss. Okay, and the target would be a measured move of the channel. Obviously we can use other tools to get confluence, but generally we're going to use the measured move of that channel 1-to-1. This is where you can duplicate that channel to make things easy for yourself. Okay, so this is known as the bearish over and under. If you have any questions, just comment and I will answer them. But what we're looking at is a run of liquidity to the upside, run of liquidity to the downside, back up to the top half of the move, or top half of the channel. Okay, and that's where, you know, that's where you can get your very good short entry. Really, you'd be laddering from the middle to the high, stop above the first liquidity run. Okay, expecting that to head back down. Okay, so that's like a over and under, or you can look at it on the flip side as a under and then over. Okay, just one way of noting channels. I've also go into a little bit more detail on the last slide here on this. So if you have questions, might save it till the end, because I do actually cover this in a slightly different way in a few more slides to come. Okay. Oh, and here's a really nice example, by the way. So this is Ethereum. Okay, so this again was more into the past. It basically was on a really nice sideways channel. Okay, so what do we do here? We're in a nice sideways channel. Okay, and you see from this high to this high, what you do is you run the high. So over, we're going above the channel, straight back down. Sorry that I didn't show the volume, but my mistake. But basically we're coming down on higher volume than what we came up. Okay, so that's a classic sign that this was a fake out. So you're going above the channel, back down below the channel. What are you looking to do then? You're looking to short from the midpoint to the top, okay, and stops above the high. And then what do? You come back to the middle section here. This is your high shorting area, and then you obviously fall off the cliff. So this is just an example of that. Okay, you mean from point 2, right? Price breaks, yeah. So if you're referring to stop loss, Karim, yeah, we're looking for, yeah, your stop loss is just above this high. So on the example, I think it's nice to show this example. So if we're shorting, we're starting to ladder our shorts from the middle of the channel up to the top of the channel. Okay, we're looking to short here. Stop loss is above this wick. Okay, so stop loss would be above this wick. Okay, that's how I would use my stops on this type of move anyway. Okay, and what we could say here is that let's say we had a short left at the very top of this channel, and obviously we can see it's not getting filled, is it? So really what we're going to do is we're going to cancel the last order for a short once we see the breakdown here. Okay, obviously once we either see the breakdown here and a retest, that would be a nice place to cancel that short and add it back on, or we can just do a market order below these lows, cancel this let's say last 1 Bitcoin, and enter a market order of this low of the 1 Bitcoin. So then maybe you have a 3 Bitcoin position filled, maybe you wanted 4, cancel the last 1, put it as a market order below the lows, and then you get filled obviously here, and then it goes back down. Or you would look to obviously get a retest in there and add the 1 Bitcoin there, and then you overall in your 4 Bitcoin short, for example. But yeah, that's how I'd look to trade this, and you would always look to have a position on the top. Okay, so 1, 2, 3, 4, for example. If you don't get filled on the top, cancel it, add it on a retest, or a market order breakdown. Okay. You mean from on the ontology example? Do you mean Ethereum? I'm not sure. I've not mentioned ontology. Cool. So I'm going to move on. I'll take questions at the end. I'll go through the questions at the end. Otherwise, it gets confusing, I think. So entries on retest plus stop loss. Okay, so buying / stop loss after a breakout. Okay, so this is kind of referring to over and unders, but in a different sort of sense of buying after a breakout. So obviously what we're looking at here is from low to high to low to high to low to high to midpoint to high to low, breaking out, retesting. Okay, so this is what you have to remember. And you've seen many examples, where we have got perfect retests. Like, one could argue this is a perfect retest, although it's not perfect that we don't hit the very top. Again, this is again from candle close to candle close. No, it's not perfect. What we do see here What we do see here is, you don't always get these perfect retests, is what I want to really emphasize. Okay, so although you can get a perfect retest, in my experience, after a breakout of a channel, the following two scenarios are more likely. So I say this is more likely than a perfect retest. Okay, number one, the retest will get slightly front run. People wanting to buy the perfect retest miss out the trade. So let's say you are looking to buy the perfect retest here of the very high. Scenario number one, that let's just say it doesn't retrace that heavy, okay, and people wanting to buy the perfect retest in the end miss out the trade because it doesn't come quite down to the low. Okay, so that's scenario number one, which is more likely to happen than a perfect retest. And number two would be that the retest will be deep into the channel, e.g. people that want to buy this retest, okay, people wanting to buy the retest, these sort of people are going to put their bids on the top of the channel expecting the perfect retest, and they're going to have their stop loss maybe like 1% below, okay. And the scenario number two, which happens quite a lot, is that price actually retraces through the channel and goes down into the channel to basically stop out the people that are, people generally always are going to trade this the same way. So you basically look for the retracement deeper into the channel, stop out people buying the retest, okay, move sideways for a bit, and then get your move back up. So basically number two, the retest will be deep into the channel, so people buying the retest get stopped out before the move continues up, okay. And this is why you should be using like market structure for good support, good stop loss zones, okay. So for hypothetical example, we could be using, I like to go two back, so we could be using this as our stop loss placement, for example. Then you have a higher low, and then you're searching for a new higher low to come in. So we could have our stop losses placed here, for example, okay? Or if you want to be tighter here, but you're not just having an entry here and a stop loss just below the entry by a certain amount of percent. You're using higher lows. I like to go back two, so this one maybe, or you could potentially do this one, depending on the RR, obviously, of the trade it's given. So that's just a way of getting you to think, basically, of where you're placing stop losses and how you're buying the retests, okay? What I would say here is, although the perfect retest is there in this red line, but if we look at the higher the move, okay, you wouldn't have gone wrong buying the higher this moving and actually looking at old resistance flip to support, and whether you bought here, you're going to be happy buying here. It's just like you just have to think. And if you ladder into the trade, you could add one bid here, for an example. Okay, maybe one bid on the perfect retest, and then one bid into the lows. And this is how I think the best way of trading. As you all know, I love to ladder, but let's say we could have one bid on the high. Okay, one bid on the high, one bid on the perfect retest, one bid giving ourselves a higher low, but inside of the range. And that way, if we do get a front run and move up, we know to cancel these lower two. If we do get a perfect retest, we know to cancel this one when we take the highs. Or if we do in fact do something like this and move up, well, then we get all our three positions filled and go. Okay, so that's just something I'd note with stop losses. So this was just another example that I wrote up for you all, but basically this is how I kind of like denoted stop losses here. So we could go back two from the higher lows. So obviously if we're looking at here, we're looking for this to come back down and form a higher low. If we go back but two higher lows, well, this would be a good stop loss placement. That then even if we run this low and move up, we're just giving ourselves a bit of a wider stop loss placement if we feel the probabilities are in our trade of moving up. And what we could say is, here, again, hypothetical, if this was coming from the upside and then we formed a range, you're more likely to break up. You want to give yourself a bit of room for that trade to the upside, okay? So we could go back two higher lows on the move for a stop loss placement, okay? With no such, don't even know what I was trying to write here, okay, basically I'm just saying we need to give our setups room to breathe, okay? If you're giving yourself really tight stop losses, maybe just below this low, you're not giving yourself room to breathe. You have to have a sensible stop loss, not just the smallest stop loss ever, just because you want to have a tight stop loss. You have to do it in a sensible place, okay? We can enter our first position with smaller size, then when we add, then we can add to that trade once it takes the high. So what I'm saying here, if you are entering with a big stop loss, obviously means your entry is smaller position size. So let's say you normally trade 10 BTC position size. If you've got a wide stop loss, then naturally it's going to be 3 BTC maybe, okay? And then what you do is buy 3 BTC on the lows, and then as you take the high, we'll then look to add in maybe 5, okay? And then get in on another low to add in your last 3, or however you want to do it, But what you're looking for is if you've got a wider stop loss, smaller position size, and then add as you take the high. That way you're proving to yourself that it is in fact moving up. Okay, so oh yeah, what I would also mention with that is if you did have the wider stop loss and you entered your first position here and then you take the high, then obviously that stop loss would be moved up to this low. But yeah, so this was another thing that we see quite a lot on channels. Okay, and this is where we go 618s to 618s, and you're going to be surprised how often you actually see channels do this. Channels form from 618s to 618s. It's uncanny how often it happens. Okay, so what we can see here, and this is link that I got this from, but what we're looking at here is from low to high we've got a fib pull. Okay, from low to high a fib, and then from high, okay, then from high to low we've also got this fib. And then what we expect is, because we've got sell pressure coming in on this six, this golden pocket, buy pressure coming in this 6-5 pocket until it breaks, what we can expect is to see a range form basically between the two 6-5s until eventually one of them gets exhausted and you break through. Okay, so this is, you're going to see this a lot. You are going to see this a lot where it will go through 6-5, 6-5. Okay, obviously, if the move is very strong, then instead of forming a range, you're just going to do that. Okay, but this is why I always like to use 6-5 as a take profit, because you're going to be noticing that a lot that you do in fact range from 6-5s to 6-5s. Okay, or golden pocket to golden pocket. Obviously not every time. Sometimes you're just going to go up, down, and straight back up again. So but yeah, you will notice quite a bit, especially if you're in a sideways ranging market, that it will go from 6-5 to 6-5 to 6-5 to, and just range between those two until either sellers or buyers overpower, and you are then going to then look for your breaks up or down. Okay, cool. So those were just a few extras. So let me just go through these questions a second. On the ontology example, it says 0.2 but you showed 0.1. I'm really confused. So ontology. So obviously ontology here. I'm so confused by your question, by the way. I don't know if I'm being silly, but I'm really confused at your question. I showed 0.2 and I meant 0.3. I honestly have no idea what you're trying to say. Maybe it's because I'm too tired, but I am not sure what you're trying to say. You're going to have to rewrite your question. I don't understand. LTC, BTC pulling back. Yeah, I'll take a look at LTC in a minute. I want to go through that, to be honest. Frequently get stopped out on one higher low. Second one is something I didn't think of too much. Yeah, so like this is a really good way of doing stop losses. So if you're in a trending market and you're trending up, okay, it kind of depends on the move. Sometimes you will get away with one stop loss, and that's what I mean by one higher low. So you're just trading every higher low, but a way of countering this, okay, is using it two back. So if you're here, you're two back, then you move to this higher low, you move this up one, okay, and you use two higher lows back, okay, instead of the most recent higher low, you're using two back, okay. So if price was here right now, instead of having your stop loss here, you go two back, okay, and have your, it's giving yourself a bit more room. If you're in a trending market, okay, so Bitcoin clearly isn't trending at the moment, but if you're in a trending market, okay, you don't really want the tightest stop loss in the world, do you? I guess a really good example, just finding it randomly, is here, that if you had, if you were looking at, if you were on the tightest higher low, and then you maybe go to this higher low, okay, if you're really, really tight, if your stop loss is really tight, you can see that you get stopped out by $1 sort of thing, and then it goes up again. Whereas if you're two back, okay, then you're giving yourself two back, a little bit of space, okay. So in trending markets anyway, you want to, not go so close into, where your stop loss is. You want to give yourself room to breathe, I guess, and that's where you can look to go two back instead of one. Really, if the move is very aggressive and trending, okay. When the price goes up to the top and you are in a long, you take profits, but when it breaks out the top, aren't you looking for shorts? So what you mean, let's just draw this up. So if we have our channel, okay, so we have our channel or our range, and we're looking to trade the range. So we're looking to trade this, something like this, up and down. So you mean we'd obviously be then looking here for a long. So when price goes to the top and you are in a long, so you're entering long here, price goes to the top, and you are looking for shorts. Yes, exactly. So you are looking for shorts as you get to the top of the channel, and this is, natural with trading channels. Eventually you're going to get stopped out as the move goes up. So obviously if you're looking to long every low and short every high, okay, and you're just doing this systematically, you're just longing every bottom, shorting every high, eventually, yeah, absolutely, you are going to get stopped out on one of the breaks, be that to the upside or to the downside. If you're continuously longing the bottom, eventually it's going to break down, and you're going to lose that long. And if it breaks to the upside, if you're looking to short every high, eventually you're going to take a loss on the high as well. So yeah, that is totally true, and yeah, has to be expected. You are 100% going to lose a trade when trading a channel. It's definitely not a 100% win rate. You are without a doubt going to take the loss on one of your trades if you're just systematically trading it. I like to also get a viewpoint of what's the most likely, okay? So I'd always be using, again, other tools. I wouldn't ever trade it alone, but I would use other tools with it to get like an idea of which way it's going to break. Have we just done this? Have we just done a part, just thinking about to what I've taught you so far, have you just seen a partial rise? If you've just seen the partial rise, are you going to long the bottom? Or could you say that you're more likely to break down? Or for example, if you've seen a partial rise, are you waiting to long the bottom straight away, or are you waiting for a bounce and then move up and then getting in your long a little bit higher? There's different tactics you can use instead of just blindly longing the bottom and shorting the top, although that is not a bad tactic. If you are range bound, you are basically looking to systematically do those trades, but the more other factors you add in, the more sort of heads up you can get of whether you're breaking up or down, or whether you are longing every top and long in every bottom and short in every top. But yeah, I guess as a starter, if you're starting off with this, yeah, I would be looking to long every bottom and short in every top, and just know that with certainty one of your trades is going to lose. And let's say you get stopped out of this long, get stopped out of this short, well then maybe you're looking to change that into a long if you sort of bounce off the top and then take the high. Or maybe then here where you got stopped out of your short, to be on the heads up for a long. Okay, and then you look to take the long there. Or alternatively, if you just fall back, then obviously you could look to get into a short. Although you got stopped out your short, you can, losing trade doesn't matter. You can look to get back in if you see big sell volume or break down in the middle of the channel, for an example. There's different ways that you can look to trade it. But this is why I think it's really, really important to get screen time. Like screen time and like chart time actually in front of your computer is kind of priceless. And you'll see how these sort of things go out and trade. But yeah, I would say as a beginner, you are looking to long the bottom, short the top, until you get a feel for the charts, until you start adding in more tools where you can kind of get ideas of whether you're more likely to break up or down, what's the trend doing, what's the volume like, etc. Like when I'm trading a channel, I'm always looking at the volume. Okay, so if we did have a channel going on here, and what we could say is, this actually, in my opinion, is not a channel, by the way. So I'm not trading this as a channel, but just imagine we are trading it as a channel, and it's if we're in a sideways channel and the sell volume is the highest, and we're seeing really high spikes of sell volume, okay, above the average, then I would expect it more likely to break downwards, okay. So it's just like, use volume as well. It's important. But this on Bitcoin is not a channel. But you look at volume and you can get heads up on that as well. If you take a trade on the 4-hour time frame, can you use the 1 hour and 15 minute for trading stops? So if I was a trader on the 4-hour time frame, okay, and I trade 4 hours, so if I trade 4-hour time frame, I would be looking in at the 1 hour to trail my stop losses. So if I'm trading a 4-hour chart, I would use the 1 hour higher lows to trail stop losses, not the 15-minute myself. If you're 4-hour, you're using the 1 hour to trail your stop losses. If you're a daily, then you use the 4 hour to trade your stop losses. If you trade off to 1 hour, then you use the 15-minute to trail your stop losses. If you look at the 15-minute, you use the 5-minute to trail your stop losses. Or if you look at the weekly, you use the 1 day to trail your stop losses. Okay, so if you're a daily time frame trader and you're in a sideways daily range, you're not using, for example, the 15-minute to trail your stop losses. Okay, you're going one time frame down. There's like I remember. This is more for stocks, because it's only 5 days a week, but you'd say whatever time frame you're trading on, okay, divide it by 5, and that's the time frame you use for your trailing of stop losses. Obviously, it doesn't work so well with crypto being 7 days a week, but I like that, what exactly as I just read out, that's how you're using your stop loss trailing. If you need to pause and go back to what I just have read out, yeah, do that. But yeah, for 4 hour, 1 hour to trail your stops. Does anybody else have any questions? If not, I'd like to go through. I'd basically really like to go through the altcoin market in general right now, specifically Litecoin, Ethereum. I will also cover Bitcoin because I really feel it's getting to a pivotal moment, and I will also go through a few alts on my list. As you can see, I've really removed a lot of coins off of what I call my favorite lists. Okay, I have trimmed this down, let's say. And that's just because for me at the moment, I can't, I used to have on this list maybe double or triple when I was scalping a lot, but because of life at the moment, I can't handle having 30 coins on my on my like daily trading list. So I've basically trimmed this down a lot. So I've not got a lot of my normal coins of trading, but that's just because of life right now. I can't be spending so much time on the PC. What's the best indicator or best way of spotting incoming high volume? Yeah, there's not really a way of where you can predict where volume's going to come in. As far as I'm aware of, there's not a way of predicting or spotting high volume coming in. Yeah, I'd say it's impossible. You can never know whether you're going to break up on high volume or not. You just have to be there at the time and see. There's no way of spotting. Yeah, there's no way of spotting unless you're like on like OBV. Even this is not going to give you really a way of knowing whether. Yeah, I'd say there's no way really of knowing whether you're gonna get volume coming or not. You just have to be there at the time and see. If somebody knows a way, then let me know. I'd be very surprised if there's a way or an indicator that says volume is going to come in here. As far as I'm aware, that's impossible to know. Because how can an indicator tell if somebody's going to buy or not? Yeah. What we could say, for example, is we could predict there's going to be a high spike in volume, whether Bitcoin breaks up or down. We can predict there's going to be an increase in volume here, but there's not a guarantee, but it's just a high likelihood that we see an increase in volume, for example, in a pattern break. Okay, you're more likely then to see your increases in volume, but in terms of an indicator that's going to tell you some things like this, no, you just have to specifically patterns are a good way. Generally on your pattern breaks, you want to see increases in volume. If you don't see the increases in volume, you look for it to be a fake move, and then you look to fade the move. But yeah, no, it was a good question. So it's a good question, but yeah, there's no way of knowing. I wish there was. That would make things so much easier. But yeah, there's no way of knowing. Cool. So yeah, I want to go through the altcoins. So let's start with Ethereum. Okay, so let's start with Ethereum. And all we want to do is I want to just start off by saying, if you've missed any of these moves, if you have missed some of these moves, don't beat yourself up about it. Like, really do not worry about missing some of these moves on the altcoins. I miss moves as well. If I miss a move, the last thing I'm doing is kicking myself in the foot saying, oh, how did you miss this? That's the last thing you want to do, whether you were busy through life or just you missed the move. It does not matter. Don't beat yourself up about it. Just look for the next trade. If you spend the day being depressed of missing a move, well, instead of focusing on the chart and actually working out where your next entry is, you're going to just be thinking to yourself all day, oh my God, I missed out, instead of looking to get in. Okay, so the first thing, if you have missed out on some of this, don't beat yourself up. And on the same way, if you had bought, for example, this falling wedge on Ethereum, if you're buying $165, I really think at these sort of levels, $116, as I mentioned today in the group, it's a critical level. This is the golden pocket and the daily. How do you trade falling wedges from high to low? Take profits 382, 618 top. So this is your second take profit region. If you're buying here, this is really logical place to take profits. And by take profits, I really need to emphasize this. By take profits, two things. When I say this is a take profit zone, I do not mean short, and I also do not mean close out the trade totally. It just means take a percentage of profits. It's as simple as that. Okay, take profits here. Do not necessarily close out the trade. It doesn't mean short either. It just means it's a logical place to scale some of your position out. Okay, okay. I just wanted to clear that up. Because what we can see here is also, you know, this channel is not perfect, but we can also see from low to high, we are seeing rejections on the top of this. Okay, slight rejections. It's a little bit hit and miss around here, but we can obviously see the confluence of top of the channel, golden pocket, daily. This daily itself, I know some people in the group actually shorted this daily, so congratulations to you, because you can now rest easy, I guess, with stops and break even. But you know, this was obviously a critical level, and we have rejected low, lower, high. Let's see. What I'd be looking for now is really this low, this high. Is this breaking to the downside, or are we breaking back up? That's what I'll be looking at now, that lower high. Obviously, if we take the low, then we're going back into, you know, at least on the 1 hour here, bearish market structure. Okay, then you're looking at 207 for support. So ETH USD, basically. I want to start with, I guess before, if I'm looking at USD pairs, I need to start with Bitcoin. So I'm going to scratch that on another Ethereum. But just while I mention Bitcoin first, let me just take off this alert. It's annoying. Basically, what can we see here on Bitcoin? Okay, so Bitcoin is really, really standard right now. We're just inside of this really big consolidation pattern. Backed is the 23rd, Monday the 23rd, okay? That is when Backed exchange is going to be open, essentially, for trading, okay? So, this is... I just want to stress really, really importantly, I view this as a 50-50 breakout, okay? Whether it breaks to the upside or to the downside, where it is right now at 10,177, I say it's 50-50 breakout. If you are trading this, okay, it would either be for the highs or the lows right now. If you're trading this for a long term to, you know, 17K or 7K, this is a gamble, okay? And I'd really struggle to find anyone that disagrees with me saying that it is not a gamble for a swing trade here, whether it breaks up or down. This is such a gamble, in my opinion. When you're a trader, when you are professional and you kind of know what you're doing, you don't take gamble trades, okay? Maybe somebody has a former TA here that says that this isn't a gamble and they know what's happening. I don't know, but yeah, for me this is a total gamble trade of this, whether this breaks up or down. It is, okay? Hence why now it's brilliant. It's really, really a blessing that with Bitcoin being such a gamble, e.g., I don't even want to trade this range right now. Not interested in it. Obviously, we had opportunities in this, and the opportunity on this range was literally when we went from the golden pocket, or when we went from the 6.5 and we took up the highs. Okay, then we went from the low here. On a click, we went from the low. What did we do? We took out the last high, took the liquidity, and since there, this region, specifically of the last 24 hours, for me has been an absolute no trade zone. I've just not taken a trade on Bitcoin because there is no edge to trading this, okay? And on top of that, the altcoins have been perfect, just absolutely amazing. I mean, Cardano today was brilliant as well. Oh wow, it hit the daily. Okay, cool. So yeah, just overall, these have just been really perfect trades to be taken. Look at that, by the way. This is the... I just noticed. I didn't even notice this on Cardano. But this was the daily that I had denoted. And we did, in fact, take out that one-to-one to the daily. So that's pretty nice. But... yeah, I mean, while there's so much opportunity on the altcoins, okay, it doesn't matter that Bitcoin's sideways. But I just totally view this overall as a gamble trade, okay. But I do foresee it breaking very shortly, possibly within the next few days, with Backed coming up. What do we have to think? What do we have to think right now? We have to really, really think of how could this play out, okay. And I've got two scenarios in my mind. I've got scenario number one, that this breaks to the upside. This triangle breaks to the upside in the coming days. What is it going to do? Just think. What is this going to do if it breaks to the upside? Okay, initially, I would say I would definitely long a break to the upside. So I, in fact, could also get... Well, I wouldn't say I'd get burnt on this because I'd have a stop loss in place and I'd protect myself. But I will be buying the break to the upside of the channel because I'm going to play it. Okay, I'm going to just trade the break. But so I will buy a break to the upside. But my actual preferred scenario is that we break up from this channel and the channel ends up being a fake out and we actually break to the upside. This gets in on the lead up. Would be lovely if it happens on the lead up to backed or the day. We break up and everybody starts absolutely FOMOing in, thinking, here we go, it's the break. And I'd be in the party of buying, but I'd be buying with the a suspicion on the buy. That in fact we get a lot of FOMO. Maybe we overshoot this slightly. But nevertheless, we see a move up, okay, where really I'm looking from the high to low, okay, around this 618, which is about 11.2, or maybe up to, maybe we come up to about 11.8 max, and then sort of break down. And what that would do is it would generate a hell of a lot of buying, okay, for it to be a fake out and drop back down. This is my number one scenario. Again, I will buy the breakout. If it breaks to the upside, I would buy that breakout, okay, but I would be taking profits here. And then if we in fact don't turn down and we just keep going up, I wouldn't complain. Okay, I would just look to compound the profits that I'd taken a bit higher up. But I would definitely be protecting myself on this region, okay? But I will definitely buy the break, okay? If we then fall back down, okay, as soon as we come back into that channel, or if I see the sign of a breakdown coming earlier, okay, and I really see a sign that we are breaking down, then obviously I'll enter a short up here, close the long. But that's a little bit more risky, okay? If you do see a break from here, you are likely going to see momentum. And you know, when you get momentum like this going on, you know, these moves can become very exaggerated. It's crypto at the end of the day. So be careful with the short if you break up. I would say this isn't a short that I would advocate really to a newer trader. You really have to know what you're doing when trying to short this, okay? And I would long here, but if I see any sign of a breakdown, I would short, you know, potentially this higher up, you know, to the higher side and close out the long. But I would just exercise a lot of caution because you know you've seen these sort of extreme moves to the upside on Bitcoin, okay? You do have to be very careful with the shorts. If you do take a loss, don't try and keep doing it over and over again because these moves are fueled by basically liquidating the shorts as they keep coming in. But I do think more likely than not, instead of getting, I do think if with a break of this triangle, more people are going long than they are short. So, you know, you could see it get continuation, but 100% this 11k, really about 11.9 to 10.9, let's say. So from 10.9 to 11.9, this whole region, that $1,000 region, I'd be playing cautiously long, okay? You get above that, and yeah, I'm expecting new highs to come. You know, then I'm looking up to around 15, 17, then obviously all-time highs. But yeah, that's one scenario, and then obviously the other scenario is that we break down from here. I don't see the bottom holding again. We've obviously held it, you know, arguably once, twice, 3 times. You know, there's different ways that you can take these trend lines, obviously. But if you're looking at like this, okay, then you could get a heads up of breaking through 9.5. But again, just like this is resistance until it's broken, this is support until it's broken. Okay, but you know, that obviously this monthly is still 9,250. We haven't had a close below that, so we're really looking at that monthly. But you know, 9,000 is the lower of the support. And again, I would really look to short this breakdown where my targets for myself. Well, I have to acknowledge that 8.8 is definitely going to be an area of support. 8.8, I guess if we come over to the futures chart, we know 8,985 is where the gap starts, down to 8,500. Okay, also we've filled this gap here. Update that. So yeah, this gap is obviously unfilled. 8.9 to 8.5. Okay, 8.9 to 8.5. That's an unfilled gap. I do think that there'll be, just like I think a fake out here, you know, everybody would be looking to buy this in my opinion. So breaking through that would make more sense, or just partially fill. But you know, overall I'd be looking down for these lows at around 7,400, or the overall 618. Okay, which is coming in at about 7.3. Obviously if you're on BitMEX it's a little bit lower, 7,000, but anywhere from 7,000 to 7.4 is fair game for me. Where would look to go next? I guess one scenario could be that we actually get the fake out, fill this top futures gap here, and then come down. That's another one. A lot of people forget about this gap, but we do have a gap between 11,695 to 11,795. But overall, I'm expecting some fun and games on Bitcoin. Absolutely. It could be as simple as breaking out, and either way, it could be as simple as breaking out and just getting continuation straight away. But that would be disappointing. I like the fun and games. um, so yeah, obviously you're gonna trade for the continuation first, but just be on the cautious side. I'd be more cautious on the upside, but obviously, yeah, if we break down here, I think it's easier to get an entry on the short. It's much easier to get an entry on the short, but you do want to just be careful of that 11. What did I say? 11.9 and back up. I do think it's less likely, but again, less likely right now. We want to trade it as it's coming. Look at the volume. The volume is going to be pretty key of whether you're going to bounce there or not. All right, so that was Bitcoin that I just wanted to cover briefly. With that in mind, obviously with Bitcoin moving soon, it's going to definitely affect these USD pairs. If Bitcoin breaks down, obviously the USD pairs are going to get smashed. If Bitcoin breaks up, they're obviously going to go up. So this is all this is very dependent on Bitcoin. You have to remember this. And with the break potentially coming in a few days, just be aware of altcoins, okay? They're obviously great right now while Bitcoin's ranging, but as soon as Bitcoin breaks out of this pattern, then the altcoins are probably likely going to suffer, okay? But if Bitcoin breaks up here, then we can be looking for ETH. If Bitcoin really breaks up, then we can be looking for ETH up for 240, then up to and really I'd be looking up for those highs. We've just got the intermediate $240, okay? 618 is coming in at perfect. This is what I love when the monthly lines up like this. We'll be looking at that lining up at around 290. Okay, so 240, 290. You close above 290. I'd say your fair games then for 320 and the highs 370. That's if you break up on Bitcoin, though. I think it's going to need that for a 70% move. It's going to need Bitcoin to perform, basically, if the USD pair wants to get up that high. At the moment, it's clearly getting rejected from the daily level here. But again, it's not the end of the day. You can look to do something like this, okay? It just means that you're in a short-term pullback. But yeah, that's the targets I'd be looking for anyway. Obviously, 240, 290... to 320 and the highs. On the flip side, obviously support coming in at $200, so $200 is a key support level. Breakdown from $200, you can come back pretty swiftly. 187, so I'd look for $200 to hold, to compound along. If that sort of starts breaking down, I'd be a bit suspect. Back down to the bottom of this channel. Okay, Litecoin, really similar to Link in my opinion. Okay, so here we can see trend line bounce, trend line bounce, trend line bounce on the weekly. So you had a confluence of support here again. Obviously, this one though did break down from the 6.5. Okay, so that in itself is a sign of weakness, but in the end it held up. Okay, so we can see it found support, low, high, higher low, higher high, higher low, and now we're forming another higher high. Really, I'd be looking here for targets. $84 if I'm honest, from last high to low. $90. If you start breaking up from 90, I'd pull it back. $114. These series of lows, $110, $114. Again, this is going to need Bitcoin to help it out on the USD pair. Okay, but yeah, those would be my targets. And for looking to compound, you have to be looking at $72 right now. The confluence on $72 is pretty brilliant. Okay, it's pretty nice. Okay, so I would be looking at $72. Again, if you start breaking back from $72, it's not going to be great. Okay, so 73, 72, you got this region. Okay, wouldn't be too great if you start breaking down from here. Doesn't mean the move's over, but that would be my preferred holding of support. Okay, I think someone mentioned that apparently Bitcoin was breaking up on the 5-minute chart. No, Litecoin, I don't know. Doesn't look like it. I don't know. I swear someone wrote, oh no, LTC putting back on the 5-minute. BTC. Yeah, it's pulling back into this, pulling back into these highs. Yeah, you could take a long off of there, absolutely. If you look at the 5-minute RSI, it's not quite oversold yet. Hidden bullish divergence. Yeah, that's pretty nice. Hidden bullish divergence going into the golden pocket, into the SR level. I'd flip it up to this high. Up to this level, 697695 for a little scalp. You could flip it up into there. Take 30% off, move stop loss up to break even, and see if you get a winner. But I'd scalp it up to there in the first instance. But yeah, that's pretty nice. Nice spot. Nice spot, to be honest. Nothing wrong with that. 15-minute. Okay, so 15-minute support is a little bit lower, but yeah, nice spot. Yeah, man. I missed. Yeah, got it on the next trade. Absolutely. So that's what you got to do. If you miss something, don't beat yourself up. Don't worry about it. When Bitcoin goes nuts to the upside, do the alts tend to go down? If we look over the last, if we look at this really over the last, if we just compare, so this is what I like to do. Let's just delete this a second. Let's clear up this chart. So if we compare this, let's get a 4. So if we look at Bitcoin here, as Bitcoin was breaking up, let's compare it to some alts. So let's compare it to EOS. Let's compare it to Ethereum, and let's compare it to Link. I guess Link was a... let's have it for the anomaly. So what we can see here, if we compare all the charts, as Bitcoin broke up, alts generally got destroyed. Alts got destroyed. Link was an anomaly because this was very much news pump. But in the end, it gave it all back, didn't it? So I guess the general consensus is that, yeah, if Bitcoin moves up strongly, then alts generally fare bad if we're looking at recent evidence. So I would say this is evidence. Obviously, Link has a little bit of an anomaly, in my opinion, if we just load up another alt. So Ravencoin, Bitcoin moving up, every alt goes generally down. Okay, is this trend set to continue? We never know. We never know. When you get a correlation like this, correlations never last forever. Generally, they don't. So one would expect altcoins to move down, but we never know whether altcoins are going to move down. You might get the scenario where Bitcoin moves up and the altcoin moves up as well. That would be obviously great if it did happen, but it's unlikely if we are looking at this statistically and what's happened previously this year. One would favour the altcoins move down. All you want to say is that when the altcoins are this beaten up, I mean, look at Raven. It's down 84% from its highs. In these sort of retracements, I think more people view value than they do. You just have to think that when something's so beaten up, if Bitcoin does move up, it doesn't necessarily mean that they have to retrace even more. But history would suggest that they will. Okay. Fun and games with Bitcoin, yeah. Can't wait. We can always wait for the experts on crypto. Exactly. Yeah, crypto Twitter. I really dislike Twitter at the moment. I just, every time I go on Twitter right now, I just like try and bite my tongue. I really don't know how I do it. Yeah, there's just so much awful stuff on that website right now. If you miss a move on the 4-hour time frame, which time frame would be best to wait for a retracement? So if you are it really depends. If you're a 4-hour time frame trader, if you trade the 4-hour, be it because your life's too busy, your family, you don't have the time to trade lower term time frames. If you are a 4-hour time frame trader only, you want to be waiting for the 4-hour retracements. Okay, generally speaking, this is generalized. Okay, if you're a 4-hour time frame trader and it moves up, you're waiting for a 4-hour retracement before you buy in, because otherwise that's just the time frame you're trading on. But if, for example, if I was looking at ETH BTC here and we go to the 4 hours, where is going to be your retracement on this? I mean, if you're looking down from this low to this high, you're going to be having to wait, let's say, a sensible retracement target, maybe this daily, that's a retracement of 10%. Not impossible, but that would be your common sort of look for a retracement target for the 4-hour. It's a heavy retracement. So if you're in that scenario where you've missed this move on Ethereum and you want to get back in without feeling like FOMOing, I would say this would be your target. But if you're going to have to zoom in, you can zoom into the 1 hour here, so to kind of see what's going on. So I would firstly wait to see if this low is taken, because if this low is taken, maybe you might get that extreme low SI target. I guess if we just look really clearly of where there's support, we can clearly see here around 2039, 2038 come in. Okay, so a few scenarios where you could look to get in here. If we take a smaller fib on the 1 hour here. Okay, so we're going through the golden pocket at the moment. yes, it's obviously not great if you do this. I'd want to see it take the lows. So at the 786, okay, 786 would be my first look for an entry. I definitely would not buy as it is right now. I don't want to see it close through the golden pocket. So I would, I guess if you're on the 4 hour, you're going to zoom into the 1 hour here, and I would look at the 786 here. Okay, why does 786? These series of lows are just hanging to be taken. You could just, it would be nice to see that, and maybe you just hit the daily again and you end up ranging. But nevertheless, I would look for the 786. Or if you start closing back above these highs, well, yeah, then I'd buy in back higher. But you never really want to buy in higher. You want to get in on a retracement. And if you're looking for an aggressive entry, then that 786 looks primed. I guess you could wait 10 minutes to see how this 1 hour closes, whether you get another wick. But close through to 618, yeah, I wouldn't be aggressively buying there. But on a 4 hour view, it's very hard to justify. If you just look at this on a macro sort of view, from a 4 hour to a daily, you would say it's very hard to justify buying here. On the daily, all it looks like is an extreme run to the upside, taking out old daily. I guess the top weekly here is a target. So, if you get another green day tomorrow, you take out the highs here, and then you retrace. I'd be very cautious buying aggressively. Okay, so there is that still upper side target to come. But I feel much more comfortable waiting for a pullback. It's just, you got waiting for a pullback that's likely, and then you got waiting for, you got waiting for a pullback very conservative, then you got waiting for a pullback aggressive. And I think what I would do is sort of trade an aggressive pullback, and then if I got stopped out of that first aggressive trade, I would then be patient, either waiting for the highs to be taken by and higher, or actually waiting for that full retracement that I prefer anyway. Yeah. Such brilliant analysis as always. Nice one, Dan. Thank you so much. Link, bit of a pullback. Oh, so there you go. There you go. Hit the wick, hit the bottom. So if you wanted in, that could have got you in. It's like a 1%. You could have made 1% from that. These are like nice scalps. 1% is like nice. But yeah, I guess now you can move up to break even if you got in on that retracement. So what I'd be looking at here, really, from this low to the high. Oh, so you're so close to the 0.5 there. From the very low. Yeah. Yeah, I guess if we take it from where we started this trend line, then slight front run on the 0.5. So if you did buy, from what I said at the start of the video, by the way, about this, if you did buy this trend line, well, great, you're in profits now, but I would have a stop loss just below this wick, okay, to be honest. Yeah, that's all I would do on that trade, okay. And I guess overall, well, I've kind of already went through link, haven't I? But we're looking for that higher weekly, but if it doesn't come, then don't worry about it. Got rejected in the end from around at 786, so I scaled off with the 786. I'm not gonna cry about it, but yeah, it'd be nice for this to hold. But I guess if we look at the altcoins, they're all moving down together. So they all moved up together, and now if we look across the board, they're all kind of moving down right now, aren't they? If we look at majors, EOS moving down, Ethereum we saw moving down, Litecoin moving down. Oh yeah, so look at that, man. So that's what I said would have been my target for the scalp. So you see here what happened pretty nicely. What you done is you retraced down hidden bullish divergences onto the 618, onto old resistance, flip to support. If I wasn't on the stream, it would be a trade I'd take every day, but never mind. Yeah, so yeah, that was like a really, I guess, easy trade. But generally the altcoins are moving down, so it's no surprise that linked in the same. Cool. Does anybody else have any other questions? Like, probably what I'm gonna do is like literally sleep after I finish this stream. I feel so bad, but I'm happy to stay up for like a few 5 minutes if people have questions. I'm really sorry that today, like, I don't know, I'm ill, and also life right now is I don't know, man. I'm sorry if I wasn't as enthusiastic, or my voice has been hard to understand. You can probably tell I have a cold by the way I sound. But yeah, Anybody have any questions from the channels? What I'm going to cover next week, by the way, I'm going to cover Fibonacci. So this is my plan for next week. Next week, what I want to do is Fibonacci channels. Okay, so I will do Fibonacci channels. I was debating doing them this week, but I felt they deserve their own section rather than getting it confused all mixed into one. What I've noticed as a mentor is if you try and teach lots of things in one session, if I try and teach like 3 different theories in one session, it's too much for people to comprehend. No, I'm not saying this mean. This is just what I've noticed. If I try and do too much in one session, then I'm inundated by too many questions, and that obviously means if I'm having too many questions throughout the week, then obviously I didn't teach something well. And that I noticed that more when I was going through like 3 things in the same thing. It just didn't work out. So that's why I decided to not add in fib channels today and save them for a separate session dedicated to them. That way you can refer to it easily and it's not mixed in with parallel channels because they're actually traded differently. So although they're similar, they're actually different. So yeah. Hey Dan, can you share your profit on 3 commas and allow the rest of your trade to... So all you need to do on 3 commas is literally set a take profit, but maybe you only want to set like 30, the way I like to do it is like 30%. You can set 30% and then let the rest run. Like you don't have to take everything. Or if you want to set like more take profits, what you can do is like 30% take profit and then let move your higher target of take profit to something really, really high that's not going to hit, Thanks for streaming while being sick. Yeah, no worries. Yeah, I'm probably going to call it a night. If I'm honest, I'm not feeling too great. So I probably will call it a night. So thank you for watching. And I do appreciate all the comments as well. It's great. I really do appreciate it. So thank you. Like on this one, just for an example, so let's say you took profits, because I did say I would take profits at 7694. Obviously, we can now see we're above that. So what you would do is look to take 30% profits. So this is the way I like to manage. If you take profits here, and I 100% would have, take profits here, then your stop loss, whatever your stop loss would have been, okay, move up to sort of a break-even position, okay, and that way, if you do fall down now, you've locked 30% in, and then your stop loss is break-even sort of thing. So whenever I take first profit, I move stop loss up, okay, and then if this runs now, then you still have 60% running, okay, and if it falls down, you've locked in 30%, and you get stopped out at break even, it doesn't matter, and if it runs, you got 66% on the board, and then maybe you can look to take profit in other places, but then compound, okay. Yeah, so that's all I would mention on and everything right now. So yeah, hopefully I'm feeling better next week. I really hope so. And I will catch you all in that stream. So yeah, thank you all so much. Let's go on the altcoins. It'd be nice if they get a little bit more life. Keep your eye on Bitcoin. I am expecting that. I would just end actually. What I think would surprise everybody is if we literally just move sideways out of this and we get no expansion. I think that would confuse, not necessarily confuse, but just would be more surprising if we just move sideways out. But just would be great for the alts if we done that. Yeah, that would be kind of great for the alts. I think alts perform best when they're sideways. So thanks a lot for putting effort into this. It is really amazing how you're doing all of this together. I hope for brighter things to come. Much love and respect. Thank you so much, Mike. Very appreciated, and the same for everybody. Thank you so much for your comments. Get well soon. Thanks for your time as always. Yeah, thanks everybody. Honestly, I'll catch you next week. Well, I'm gonna do Fibonacci channels. And yeah, I really hope I've got over my cold. I'm normally, I think I will get over it. I'm normally quite good at recovering, I don't know. I've generally got a really good immune system. I'm like never ill and stuff, so that's really annoying. I think it's just because lack of sleep and like stress is making me ill. I don't know, probably. So yeah, I'll catch you all next week anyway. Thank you all so much for watching again. Yeah, keep trading these alts. There's no reason to panic. For me right now, the dips are more for buying than looking to short anything. I'd only short once I see a sign of weakness. As it stands, I'm looking to compound and buy dips rather than short them. But obviously, if we start seeing high sell volume come in, then it changes. But as it stands, yeah, there's no need to not to look to buy the dips. Okay, just keep your eye on the volume. So yeah, thanks everybody. I will catch you next week. Cheers. Thanks. Good night. Bye.